Look, there was no great surprises from the moves today. I think that was widely telegraphed, as you indicated, and widely expected by the market. But it does confirm that monetary stimulus, at least, is occurring on a significant basis in China. Obviously, we need to see more in the way of fiscal stimulus and more confirmation regarding the total size of the package. Monetary stimulus is fine as far as it goes. But there's always a danger that it ends up just pushing on a string in China, if that's all there is, for the simple reason that the cost of money, the supply of money is not the real issue in China. The real issue is a lack of demand. And that's why I think fiscal stimulus is so important this time around. I think we will get something, and I think it will provide a lift to growth. But it's a couple of issues around that. I don't think it's going to be of the scale that we saw coming out of the GFC or the pandemic. So you're probably looking at something which keeps growth more around the 5% level, hopefully on the upside of that rather than the downside, possibly as high as 5.5%. Then the big question becomes, what about the structural challenges in China? And I doubt that the current moves will be enough to address all those structural challenges. So yes, we get a cyclical lift and some support, but I think longer term, you're still going to see that ongoing downtrend in Chinese economic growth. If you look out a decade or so, we're probably seeing growth trending down to around 3% per annum, currently sort of from around that 5% level.
We've seen the markets swing in both directions in response to the latest and all the stimulus that has come through from the Chinese officials. But where the valuations stand now and the expectations for more contributions, where do you expect the market to go?
Look, I think there's more upside. The Chinese share market ran ahead of itself when it rallied by about a third ahead of and just after Golden Week holiday, up 33% or thereabouts, depending on which index you look at. That, I think, was way over the top, way too far, so it's understandable. We've seen about over one-third pullback from that. But the Chinese share market is still relatively cheap. I think it started that rally 3 weeks ago at a PE of around 8 or 9 times, and it's not that different to that now. So, sort of around 9 or 10 times. So it's still relatively cheap in the great scheme of things. So if we do see, a decent amount of fiscal stimulus announced in terms of the dollar value, and it occurs in a timely fashion, then I think there is more upside for the Chinese share market because it is relatively cheap on a global basis.